Welcome back to another edition of This Week in 3 Minutes. I've called this one the Coming Currency Calamity. Look, we need to consider probably the most dangerous thing that is going to impact our lives going forward, and has been probably the largest contributing factor to the anomalous activity we've been experiencing in the capital markets, in the stock markets, bond markets, etc., gold market, and that is government intrusion, government policy. I mean, we obviously, when we look out there right now, nothing makes sense from a rational perspective of supply and demand fundamentals. That is not the world we live in currently. We'll always get to it. There'll be flare-ups where, of course, the reality hits home, and they'll introduce new policies to continue and extend and pretend, and maybe there's something even more significant in the works. But I wanted to touch on a few examples of policy that have impacted us in the past and today. So in the 1900s, the world transitioned as a matter of policy away from British pounds into US dollars. And then in the 1930s, the US dollar was dramatically revalued against gold. Again, it happened in the 1970s as a result of the monetary policy decision made under Nixon in 1971 to depeg from gold. And now what we have going on in modern times is the push by many central banks and governments around the world to get away from the US dollar and move to something different. Obviously, I'm talking about the SDR, which has a gold component in it. So what else as a matter of policy has been messing up our world? Well, we've got gold, for one, being held at $1,200. That is clearly a matter of policy, as the IMF members never want to talk about what they're doing through the BIS and that. That's hush hush. You're not supposed to look there. Policy. Stock markets, record highs. Why? Guess what? Policy, government policy. Things like, money printing, quantitative easing, ultra low interest rates, stock leading to stock buybacks, and where else are you going to go? There's no money to be had in the bond market. The real estate, why do you think the real estate valuations? Everyone feels so great. Their stock market portfolio's up, their real estate's up, everyone's feeling wonderful. This is what they want. They want behavioral economics to make everyone feel like everything's A-OK. We've got dysfunction in the emerging markets as a result of U.S. trade policy, where the rest of the world feels like the U.S. has declared war on everybody. We've got military policy leading to a dangerous situation of Russian warships and American warships, Israeli warships, British warships, all in this tiny little corner of the Mediterranean. This dangerous situation, a powder keg, if you will. More policy. Global sentiment right now to reject the U.S. dollar. There's a push by Juncker, who's the head of the EU, to get off the U.S. dollar when it comes to energy in Europe. The obvious fact that he pointed out is 80% of European energy is bought with U.S. dollars when only 2% of the energy comes from the U.S. Well, of course it makes no sense. So why would the rest of the world continue to use the U.S. dollar if they don't have to? So a new policy is going to come forward, and I expect it will be readily apparent to most people by 2020 that a new global currency regime is here, and the relevance of the U.S. dollar will take a dramatic decline. And it's not going to be a smooth ride. It's going to be a calamity. And those who have the sense to own gold or silver, you're going to come out far better. Not to say you're going to be, living a life of Riley, but you're going to come out far better than as if you didn't own any. And that's why you keep this. It is monetary policy insurance. That's the best way to look at gold. It is policy against the ludicrous decisions made by central planners and governments. And that's the best case scenario. A new global currency regime comes about. You do well in your gold, and maybe the other assets take it on the chin. But the worst case scenario is one you don't even want to think about. So as you head into the retirement years, I want you to consider attending my webinar. And if you're recommending or advising people heading into retirement, encourage them to go to my webinar. Click below, there's a link to it. It's next Thursday at 3. I hope to see you there. In the meantime, have a great weekend, and we'll see you next Friday. Cheers.